Here we go. We are live. So thank you everyone for joining on the show. As long as you guys don't already know, but this is a new series that we're starting up on Hidden Edge Pod. 1 second. Sorry about that. This is a new series starting up. It's called The Third Degree. So basically, we're going to bring on guests, probably on a weekly basis, where we're going to bring in someone that's very popular in the community, kind of interview with them and talk about a few stuff. You know, whether today that's going to be Palantir, maybe next week it might be something different. We might go into a little bit of the international stock market region, where we're going to be checking out some companies abroad. All right, but don't want to give too much information away. But just to kick things off, for this one, I wanted to introduce one of my good buddies of mine. I've known him for about a year. His name is Garcia. What's up, man?
Hey, Sam. Good to see you, dude. Good to be on.
Yeah, I know, man. How you doing? How you doing tonight?
I'm doing pretty good. Feeling good. Wearing the new merch. So I received
Very
a nice package from Palantir the other day.
Nice. How excited were you when you received that, by the way? I saw that in Twitter.
Oh, dude. I didn't expect. When I saw the box, my wife said, "Hey, it's for you," and then it says from Palantir on the box. Like it says, like from to Garcia Capital from Palantir. I'm like, holy shit! I think this is a black box because the box is pretty big. I open it up and my son is super excited. He wants to open this up, and oh wow, there's some people already supporting the channel too. There's Heidi, Steve, Anthony. That is awesome.
We got Steve Bacon here, Heidi. There's actually a ton of people here I've never even seen before. But I mean, I'm not gonna forget Steve Bacon. He's like the most degenerate mofo on Twitter right now. But to be completely honest, if he's winning, I'm winning because I got those degenerate bets too, man. Who delivered the black box? I always wanted to ask, like, did it come like just in that box alone, or was it like in a UPS box or something?
Yeah, it was in a UPS box. So Eliano from Palantir, he sent me the box. It had like a nice note in it, and it came with this trucker hat. It came with a black crew neck sweatshirt, and it came with a signed gray Palantir hat from Alex Karp. Like, so that is definitely going to go, in the collection, and it's going to be. I'm not going to let anyone wear it. It's going to be, what is it called? In behind glass. So
nice.
Yeah, for special occasions.
Yeah, one of those glass encasings that a lot of people put like the memorabilia in. That's awesome, dude. I mean, just the fact that it's a company that you've been following for a long period of time. Something that, like, when you study a company so much, and especially the CEO and all the executives on there, you feel like you kind of know them personally. But now that guy knows you personally because he signed a hat for you.
That's and it's still very like every day I kind of wake up and I realize, wow, like I'm surrounded by such a positive and such a reinforcing community, like where I mean I feel like I just kind of post memes and I just kind of post certain things over and over again, but I mean everybody's very supportive, like, and we all support each other. Like I love supporting you on this new podcast that you're coming up to. It's incredible. Like you're on episode 5 or 6 right now.
Honestly, I don't know. I lost count at this point. At a certain point, just like, okay, 5 or 6, but then like we kind of did like half episodes and stuff for the Discord. But yeah, Kris and I, we started this thing, and I mean, it's fun just to like get to know people, get to talk to them. I mean, we've never met each other personally, but like I said, I've known you for like a year, especially from Amish channel and the Palantir Weeklies. But yeah, man. So I wanted to kind of kick things off. Wanted to talk about basically like your journey, like when did you start investing, and like what did you do that brought you here today and what did you experience along the way that taught you some good lessons?
So I guess like the genesis of it, I mean, even just in high school, I was always interested in economics. I think economics was probably my favorite subject senior year. I took some courses in college, and it's something that I really loved. I love learning like macroeconomics. And I think it was 2019 when I started buying and selling stocks on my very first Robinhood account, because there's an account that I opened up originally for myself, which I basically made all the terrible mistakes. You know, I blew up that account. It was a couple $1,000. It was like 4 or 5 grand that I deposited in there over time. And I was buying calls when I thought QQ was going to go up. I bought puts when I thought it was going to go down, and basically ended up slowly draining that account out. But the turning point, I think, for me was when my wife, who was my fiance at the time, she was my girlfriend at the time, actually. She noticed that I was like pretty bad with money as far as budgeting. Like I would get my check, I would spend the money before the next check would come in, and I would be a day short. Maybe ask her, hey, can you spot me for lunch? I'll pay you tomorrow. I get paid tomorrow. And she noticed it was kind of a pattern. And that's when she realized, she said, hey, like, I don't know. Like, I don't feel comfortable continuing this in the long term if we're going to have issues with money later on. And for me, that was a wake up call. That was a wake up call for me to get my financial shit together. Even though I know the theories, I know what we should do. In practice, I really wasn't putting it to practice at the time. I think I was 25 at the time. And that was kind of the turning point where I became almost obsessed with, you know, getting good with money. And that was when I really started just applying as much as I could, you know, like budgeting, spending the right way. And now I'm a lot more obsessed, you know, with finance and economics than she is. So that was kind of like the genesis of how I got, you know, really into this. And I mean, to where I'm at now, like I just to come from, you know, like watching Amit's channel, you know, about a year ago, Finance Junkies. I would tune in the comments, you know, like met so many cool people in the comments, like ETF right here in the comments. You know, I love that guy, and it's incredible, you know, from the meetup, you know, in Vegas to then start talking to people and connecting with so many people. And now I feel like I'm just part of like a, you know, such a big community. I'm just, yeah, just excited.
Yeah, that's awesome. I mean, I have a pretty interesting story with my wife that I'll probably go over at some point in another episode, not today. But that's pretty interesting. So your wife saw that you had bad spending habits, you had no money, but then she ended up marrying you anyway. So like, how much did you pay? No, just kidding. I'm just kidding around, dude. But all right, that's pretty cool. So when did you start investing? Did you say 2021?
20. I'll have to log into the original Robinhood account.
Oh, okay, got it.
I think it was like 2019 or 2018, 2019 is when I kind of first opened it. And I really just made so many like terrible choices with it. Like I was literally just gambling, literally just fucking gambling.
Yeah.
And
I mean,
yeah.
In your defense, like before 2020, you know, that was really when the investing community wasn't that big. That's when like the amount of social media education you can get, besides of course financial ed, Jeremy, wasn't like literally available. But it was when COVID started, when people were like just trying to post all this education stuff, and that's when the real degeneracy started. But before that, it was kind of, you know, like I said, testing the waters and stuff. So I remember we were talking before, and when did you start? Because I know Palantir, they went DPO, direct public offering, a few years back. So when did you buy your first share in Palantir?
Oh man, the very first share, I might have bought it a couple months
call
after,
option.
because you know what? That's what it was. I was buying call options back in was it October, November when they DPO'd. And that's when I was in Wall Street Bets too. Like I would kind of like check their site every once in a while, and that's when they started really pumping it. And I remember the very first big bet that I put on Palantir, like it was that call option like made quite a bit of money. Like that's when it was going up from like 10 to 15, 20, 25, and it was ripping for quite a bit. But it was, at the time, the mindset was totally different. Like the mindset that I have now, like I wish I would, you know, it's one of those things where you wish you had it, but maybe everything happens for a reason. You know, maybe it was good that I had to go through those growing pains, and then I finally developed the mindset of, okay, I'm done with all these risky call options on my main portfolio, and I'm going to start dedicating on accumulating shares, you know, buying and holding, just keep adding, instead of, oh, I'm buying a couple hundred shares now and I'm going to sell them tomorrow because it went up by 10%. And I'm just going to buy back in when it comes back, and it never does. And I buy higher, I sell lower, buy higher, sell lower. It was just,
I hear you, dude. Like that's like really something that happened. Like it's weird because I did really good with investing when I was younger in my early 20s because I would literally just buy what I know and I would just hold it for years. And I would just forget about it, right? But I'll just keep putting money in it. And there was this
Yep.
company called Apple that I invested in very early, probably around when the iPhone came out. And it was
Yep.
probably my greatest return I've gotten and my longest holding I've ever had for a long period of time. And I did
No
have
way.
Google before that instead of Apple. No, but I hear what you're saying. It's like I feel like the more you know, like everyone kind of goes to like this curve of the profitability when it comes to trading or investing. Is that like first they do good because they don't have that knowledge, and then they
Yep.
do terrible because they get too much knowledge, and then it
Yep.
kind of like creeps up a little bit, you know? When I
I feel
when
like
I would what is it? Yeah, when I kind of think about it, that's kind of how Palantir was in the stock market. You know, it started off, had that big boom, and then
yep.
came down during the 2022s, and then it just came right back up with profitability. So, did you hold from 2021 all the way until now?
No. And it's one of those things like I regret, and I definitely don't shy away from talking about it. I wish I still had the picture, but in the Palantir Discord, I was sharing a screenshot where I had bought in the shares at $6 and I sold them at 8 because I was going to do something else with the money. It was one of those things where it was like, it's such a terrible flip. Like my mindset still up when Palantir was in the lows. Cause I mean, this was relatively recent as far as Palantir's, let's see. Yeah,
Yeah,
this
that
was
was the
back
beginning
in
of 2023. Yeah.
beginning of 2023. So beginning of 2023, I still had that terrible mindset of, oh, I'm just flipping these couple hundred shares. I'm just going to buy here, sell here, buy here, buy here, sell here. And to look back at all the times that I bought so low only to sell a little bit higher, that, you know, it still haunts me a little bit. But, you know, the past is the past kind of thing. You know, for me, the mindset really changed back in, I would say 12 months from now, for 12 months ago. I think back in June, July, August of last year is when I really, really started saying, okay, what am I doing here? You know, am I really going to be flipping shares from 15 to 17 now and just hopefully get lucky and buy back in at 16 to sell at 18 and repeat this process? So it's just one of those things where my hat goes off to all of the Palantir investors that bought from the beginning and they kept buying and holding. Everybody is on different stages of this journey. You know, some people are still buying and trading, and that's, you know, if that works for them, it works for them. It's one of those things where everybody kind of finds their own strategy. And even if you have a similar strategy as someone else, you might have a little twist to it where you might allocate a little bit to something else, or you might go about it slightly differently. So everybody has their own way, you know, like this is a very individual game that we're playing, you know, as a community, but it is important, you know, for everybody to make, you know, everybody pushes, like TJ says, everybody clicks their own buttons and pushes their own buttons and live with the results at the end of the day.
Pretty much, man. I mean, it really is all a learning game, and there's no doubt that there are those legendary investors, but like those guys make just as many mistakes as we do, and they weren't born like a pro. Like even today, like they still make mistakes. Like we could look at Apple like 10 years from now, and Warren Buffett would have sold like probably at its lows, or you know maybe it's gonna be 10 times. Who the hell knows? But yeah, I mean, at the end of the day, you know, it's really a learning game, and it's really a journey along the way, and you just got to pay tuition, like he says, man.
Yeah.
So how many shares of Palantir do you own?
Now I own about 44,002. Let me just check real quick.
That's crazy, man.
4,322.
Yeah.
So,
What?
and I was
Yeah.
actually talking to my wife about this. I was telling her, I said, "Hey, babe, you know, every time Palantir goes up by 10 cents, our portfolio goes up by 400 something bucks."
That's
Like
insane when you think about it.
I was just breaking it down like that. I said, "Look, if Palantir just goes up by $1, our portfolio went up by $4 grand just by
Yeah.
$1."
Wow,
So
that's
that,
crazy.
and I think and it was actually today when I really started like thinking about it harder. I'm like, holy shit, like if I could just keep this up and get to maybe 10 grand or 10 grand or whatever, as long as the story and the fundamentals are still on the right track, then for me, that's my game right there. And
Yeah, go ahead. Sorry about that.
oh no, that's kind of like I was gonna talk to you about like the whole Peter Lynch thing, you know, whenever we get into it. But
Oh
that's
yeah, yeah, we're
like,
gonna get into that after we talk a little bit more about your portfolio. But
oh yeah,
so you got 42,000 Palantir shares, and when was the last time you bought a share?
the last time was today. I bought
Damn,
shares.
dude. Do you
Yeah,
call that a dip?
and
Do you call it a dip?
no, for me, the way what I called it was and I bought 47 shares because I had money sitting in one of the accounts and it was sitting there as cash. But then I realized, look, I have some cash in the other portfolio sitting around too. Let me just get used to buying at a higher level. Because one thing I don't want to get stuck on is I don't want to fall in love with my cost basis. My cost basis right now is around 1950. I don't want to wait until Palantir goes down to the low 20s to then start buying just so I can maintain my average.
Yeah, that would have been like last week.
That would have been last week. Exactly.
Last Monday.
Dude, that was crazy. That was crazy.
That was pretty crazy. I'm not going to lie.
Dude, I woke up on Monday. I think I woke up in the middle of the night and I kind of like checked and I said, holy shit, look, the market's fucking tanking.
So wait, you're East Coast. So you woke up like around like 5:00 a.m.
Dude, I bought shares at 2 a.m. when it was tanking.
Yeah.
I bought shares.
Oh, that's crazy.
I bought shares at $20.36 and Robinhood reversed the order at 8:30 in the morning.
What?
Reversed it. Like I bought the dip, and because it was during the 24-hour market, I guess they work with some third-party company, and I guess the third-party company didn't want to. I don't know, dude. The order went through. The cash left my account.
Yeah, I thought they disabled that the night of, not the pre-market before it.
No,
oh, that's weird.
I bought during the pre-market of Monday. And I only bought 25 shares. It's not like a massive loss, but it does suck to know that
it's a principle.
The principle, exactly.
Yeah,
Can you imagine people who actually dropped even more money because they said, you know what, this is my chance. I'm dropping all this money, only to get reversed at 8:30.
Honestly, I had like maybe a few grand in my Schwab account and a few grand in cash. Like the rest of it was already invested. But I had like a few grand in there, and I'm like, I was buying hard on Monday. Monday, it was just like all my cash is just gone. Like I spent everything. I did like some reallocation of capital and stuff. And Palantir was actually one of the holdings that I got back into on Monday morning. But I literally was like, I have to get back in here because I saw it drop to 20 and then get back to 24. And I was just like, oh my God, I got to get back in. So I was going to put in a limit order, and I put in a limit order for like somewhere in the low 24s. And I just like got in. I was like, should I sell puts? And then I was like, you know what? My capital is probably better to put into something else than to like keep collateral on the side. It was like $2,400 per 100 shares to sell a put. Right. So I was like, whatever, let me just put this something else. But I mean, I got back in at that time, and that morning was crazy. The VIX is at 65. There was just fear all over the markets, man. Like, what was your first instinct as soon as, like, because you said you woke up and like the first thing you thought was Palantir?
Like I woke up to take a piss or something, and I'll check
Palantir.
stuff. I'll check Robinhood. Because it's on the over markets, and honestly, I've been able to buy really good dips like at 2-3 in the morning sometimes. I just happen to wake up and I see that it's in a really big dip. Like, I have some cash, I'll just buy some more.
Yeah.
And this time I started checking on Twitter, and I was realizing, oh wow, so something's really going down in Japan, and the fear was off the charts. I mean, one of the things that I recently been posting that I mean, I don't think it's going to get huge just from me talking about it. But if anyone has huge accounts, let's just keep it between us, the whole Google Trends. Because honestly, I feel like there's something to it, man. Like, I've been tracking the Google Trends for like market down, stock market down.
Yeah, I saw that.
And it peaked in April of this year. It peaked on Monday. And literally after those marked the bottom. Every time it peaked, that was the peak interest on the average Joe saying, hey, I heard the market was down today. It's like, well, yeah, it's already gone.
Wouldn't you know that it was the peak after the fact, not while it's happening? Or you just like look at the trend, you see it like spike up like the VIX, and you're just like, oh, okay, well, this is pretty much it. Yeah.
We're getting close. Like for me, that's the way I see it. I won't see it like as a for sure thing, because I was actually calling it on Friday, the Friday before the big dump on Monday.
Yeah.
I was realizing, oh wow, it matched April's high. So I thought we're getting somewhere close. If April was 50, this went to 100 on Monday. But ever since Monday, it's been on a steep decline. The interest in the stock market and all that has gone away. The stock market crash.
Yeah.
The whole world is burning down. It's just gone. So
that's kind of the scary part, because like everyone is waiting for the supposedly like the dead cat bounce to end and then go back down. And they're waiting and they're waiting and they're waiting. And then now like I feel like the bears like kind of giving up per se. And like that's usually when it comes back, when people just give up. But I mean, I feel
Yeah.
like we already had a big catalyst event today, PPI, which came in at 2.8%. And then tomorrow CPI, which actually the banks are projecting it to be like around 3%, right? So
That'd
if
be
we
cool.
come in at like 2.8%
Yeah.
and the market starts rallying higher, are you still going to throw more cash at Palantir?
I wouldn't throw, well, for me, just because I just bought today, I don't think I'd buy again until maybe next week or in 2 weeks,
Oh, your
unless we
next
see.
paycheck or something?
Yeah, and
Okay.
honestly, and actually, to talk about that, I really haven't contributed, I mean, honestly, anything to the portfolio ever since we moved to Arkansas.
Yeah.
Because in California, we were both, it's one thing that they don't, I mean, people talk about it where you move to a smaller state. Yes, the income will be smaller, but the cost of living is also less.
Yeah. Yeah.
So I think with all of the inflation and all of the new things, the cost of living hasn't really gone down as much as the income went down. Like our income went down more than the cost of living went down. So I personally feel like our money situation is a little tighter here than it was in California, where we're making a lot more
Really?
money. Yep.
Same company
So
that you're working with, though, right?
no, a different company.
Oh, okay. Okay.
Yeah. So that's one of those. At least for the area that we live in, it's not really as like as cheap as like we kind of
Yeah.
anticipate it to be. So that is one thing. So we've been paying off other things, and we kind of put deposits into the account like on the back burner for now. But selling puts and selling calls on the shares has really been bringing in a lot of money into the account that I've been using to buy more shares. So all of the times that I've been really buying dips this year was mostly off of premiums.
Yeah. So do you have any covered calls right now?
Right now, like 14 at $33 and
Oh,
3
shoot.
at 34.
When do they expire?
I think next week and in 2 weeks.
Oh, damn. What was the premium you sold it at?
It was like 60. I have it right here. Let's see. I sold. Yeah. So the reason I had 14 covered calls is because I had 14 cash secured puts. So I kind of wanted to match them.
Yeah.
I had cash secured puts at 27 and covered calls at 33. I received
So
12
yeah.
cents. Yeah,
So when
12
was the
cents.
last time you had like covered calls assigned to you? Basically, when was the last time you were forced to sell? Never? You just keep rolling?
I just keep rolling. I
All
just keep
right, man.
rolling.
Just keep
I
rolling.
keep rolling, or I buy to close at break even, or even at a small
Yeah.
loss. I actually, I mean, I guess looking back, it wasn't the right call, but everybody can do that, right? Where hindsight is 2020. But before their earnings, Palantir was like pumping up to the 27s,
Yeah.
28s,
Yeah.
and this was before earnings. And
Yeah.
for me, that's where that fear started kicking in of like, holy shit, what if they announce
You're gonna lose. Alex
gonna
Carp's
lose?
gonna
I'm
be
like,
like, I'm taking a hat back, mofo, man.
yeah,
That's my
dude.
hat. That's my hat.
So I
Yeah.
actually bought to close those covered calls at a slight loss. And looking back, I still made a lot of money this year, but I really didn't want to risk having those shares called away at 29. I think I had them at
Yeah.
28.50. And I realized, I don't know, man. If Palantir starts staying above 28.50 after earnings, I might lose these shares.
Yeah.
And
Yeah.
glad to say I haven't been assigned on puts or calls this year. So
Yeah.
I'm, knock on wood, I'll continue that process because that it works for me. Like I don't have the patience to sell a cash secured put and wait for assignment to then buy the shares. If I see the dip, I want to buy the dip now. Because for me, in
Yeah.
my mind, I'm saying like this is the opportunity to buy it. I'm going to sell it now. Whereas the opposite side with covered calls, I'm not going to sell these shares under any circumstances. So that's kind of where I'm at on both sides of the game.
Okay. Well, I mean, I got some stuff that I did in Palantir as far as the fundamentals go. I'm sure you were tuned into Amit's stream or someone's stream regarding the last earnings that happened.
Dude,
I wanted to huh?
I was stuck at work on that Monday during earnings.
Oh, that's right. That's right. You were
so
like, you flip
sad.
your boss off and you're just like, hey man, I got the Palantir earnings call coming up. I can't be here right now. You know how important this
dude,
is?
I was so bummed out, dude. I wasn't able to like actually like pregame and like watch the earnings and all that.
Yeah,
So
yeah. One thing that was pretty interesting here and over here. So
oh yeah.
what I found really interesting was the amount of growth that they experienced. Like because a lot of companies right now, and usually when companies mature more, they have their year-over-year growth where they're basically comparing the earnings that they've received, the revenue they've received this quarter compared to a year ago, same quarter, and then
Yep.
that's how you get the year-over-year growth. What was really interesting was that they totally beat the expectations coming in at 27%. I think they were guiding for like about 24% since last quarter, and Wall Street was kind of estimating around there. So when they
Yep.
came in at 27%, I was even blown away because I didn't even expect that. So when I bought the dip on Monday, I knew that they were going to have the earnings that very same day.
Yep.
So it was kind of like, I was kind of like gambling a little bit because I was getting back at where I sold before with the expectation that this thing could be down like 10% tomorrow, like how the last earnings went. So it was down like 14%, right?
Yep.
But I just had a feeling that the way that the dip was bought so hard in this company, it was like, this is probably the safest company to be in right now. So as far as a software stock goes, because if you take a company like CrowdStrike, that was probably one of the leading and one of the most expensive cloud companies out there before Palantir, that they were trading like 21 times EV and TM revenue, which is basically taking the enterprise value divided by the next 12 months expected growth. And Palantir was actually cheaper at the time, but then when CrowdStrike had that hack, or not that, sorry, when they didn't have the hack, but they had when they pushed out that update that crashed a lot of Windows computers. I'm thinking like, dude, that rule of 40 that CrowdStrike has is not, because it's based on 12-month trailing growth added to the operating margin, and that's going to get hit. Because if CrowdStrike starts losing customers, that means that their growth is going to decelerate. They're going to guide for lower growth, and also their operating margin is going to go down, because then they're going to have to probably incur more costs on paying all those sues and lawsuits that they got, whatever it is, especially with Delta. So now that kind of puts Palantir in the light. Like, this might actually be one of the most valuable software companies to own. Because in my eyes, Palantir is a software company. Like, I know they do a lot of other stuff, but at the end of the day, they're trying to sell their software. They have a go-to marketing team and everything. When you think about the rule of 64, I had it over here. So they're at a rule of 64. Last quarter, they're 57, right? And then before 54 and then 46. This number keeps going up. I'm not coming in, I'm not expecting Palantir to be at like 64 plus rule of whatever. And on top of that, also the way they're calculating the rule of 40, it's supposed to be the trailing 12 months revenue growth rate plus the operating margin. And they never really make a definition on like which operating margin to use, whether that's the GAAP or the non-GAAP. Palantir is using the adjusted operating margin. So that would mean the non-GAAP. So not general accounting principles, right? So technically speaking, this figure could still be high, but if you take their actual like GAAP operating margin, it's 16%. So 27% year-over-year growth plus 16. All right. So then that's like 43, right? Is that 43? Can you fact check me on that one? Someone tell me. Is it? I'm like trying to think of this while I'm screaming out. Yeah, I think it's 43. It's 43. So 43. So the rule of 40 is saying anything over 40 is considered a pretty good company, right? Excluding its current valuation. Like, that's a good SaaS company that's a good cloud company to compare to other ones, right? So a 43 is still pretty good, even on a GAAP basis, right? So if shit really hits the fan and we have a recession, whatever it is, when you have a recession, Palantir will probably get hit, just like any other cloud. Do you agree in that?
Yeah, I think so. Just like any other company.
Yeah, just like if the market goes down, Palantir is not going to be like outperforming the market. It's very hard to do that. Software company, they're dependent on other people spending money. When you have a recession, other companies spend less. But if you have that, if you want to be in like probably one of the best cloud companies to be in as far as valuability, like Palantir is actually pretty up there. And that was like kind of the thinking that went through my head, is like, this is probably a better buy, in my opinion, if you want to diversify from cybersecurity to get into Palantir, to diversify the software portfolio. So I don't know. I thought it was good, and I just want to tell you that, man, because if you're going full port in something, this is probably one of the best companies you could be full port on. So now, with that being said, what else you got in your portfolio?
I mean, so I was adding them all up. So it looks like I'm 95% Palantir and 5% cash and everything else. So let's see.
Wait, you're 95% Palantir and 5% cash?
Oh no, 5%, 5% everything else. So 5% includes the cash, leaps, and some shares on like leveraged ETFs. So I have the leveraged Bitcoin ETF, BITX,
Yeah.
like $800. So that's like what, maybe 0.5%.
Yo, that thing was like in the low 20s
I know. And I
just
was already
last
kind of
week.
fully
Yeah.
allocated. I was already fully
Yeah.
allocated to it.
Yeah, I
And I
hear
was
you.
thinking like, and that's where the conviction really lies though, man. Like
Oh yeah.
I wish I had the conviction that the Bitcoin bulls have on it, because I mean, I'm sure I would have full ported on BITX if I had that conviction that they had, but I don't.
Yeah, I hear you, but like the thing moves like crazy. I mean, even if you had like regular Bitcoin, I think Palantir would have actually outperformed that since last Monday, because Palantir is up like almost 50% since the
Yep.
Monday lows, and then
Mhm.
crypto was, or Bitcoin was at like 49,000, so now it's at like 61,000, I think. So you actually made the better decision of staying in Palantir, because when you're in Palantir, you're not in like leveraged Palantir, you're just in Palantir. Right?
Exactly. Just shares. Yeah.
Unless
No,
you're wearing the hat when you bought it, but you didn't have the hat yet. So you weren't leveraged on Palantir yet. So all right,
bro.
man. You're in TSLL, right?
So I actually sold that at TSLL. So
Really?
I sold, yeah. So the reason for me personally was because to concentrate even more on Palantir. Like
Good.
I kind of started off with basically all in Palantir. I started kind of diversifying a little bit into TSLL, BITX, and these other companies. But I realized I had about 10 grand locked up in TSLL between the two accounts, and I decided to sell all those shares. I think it was a slight profit, but then I bought one leap on Tesla. It's a $500 call for December 2026. So it's a very high
Okay.
strike. It's a
Yeah.
ridiculous strike, but
Yeah.
and it's one of those things too. I remember whenever I would buy like a very high strike leap, I wouldn't hold it so long, and I think it was partly not the fear, but like, man, people are gonna think I'm stupid for trying to buy a $500 strike on Tesla, or a 300 strike on Amazon, 350 on AMD. But these are for December 2026, and I'm literally only buying these as this kind of like a swing trade of sorts.
So
Where
you're not planning on waiting until 2026 to sell it, right?
no, I'd probably wait.
Yeah.
Maybe, I mean, I might sell out as early as 6 months or a couple months from now, or maybe a
Yeah, I
year,
hear you.
depending on how long it takes for RSI and it to get overbought and it to get heated
Yeah.
up. I would sell it then, and then
Yeah.
probably buy your shares.
Actually, you know what? Maybe we should take a look at that. Do you have actually, I think I can bring it up on here because I want to see the price of that contract.
Yep. And
Um,
actually, and the reason I bring it up too is the last time because I actually had an NVIDIA call last December of last year. I had a $1,000 NVIDIA call option for 2026 or late 2025. And I remember holding it and I thought, man, that's way too high of a strike. It's just so stupid. Like
yeah.
NVIDIA is never going to get there. NVIDIA was at 300, I think, or 400 at the time,
Mhm.
pre-split. And I was thinking, I don't think NVIDIA is just going to get that damn high. And I'm just going to look like an idiot holding a
And here it
$1,000.
is. Yeah.
And dude, just a couple months later, a couple weeks later, started really pumping. And then just to punish myself, I looked back to see where I sold it, how much the contract was worth. They had
You add
I
it to your
think
watch list, or you just look back at your history?
I just looked back at the history and checked where
Okay.
it's at now. It was like a 15x. It was like it was an insane.
I
It was an
mean,
insane,
so
insane.
15x, but like if you really think about it at that time, you probably had much less risk being in Palantir, right? And I'm
Yeah,
not trying to pump Palantir. I'm just saying, in hindsight, everything looks a lot different. But when you
yeah,
have when you have shares versus having like a call option, which is a leverage asset,
hmm
your risk level just goes through the roof.
hmm
Right. So
yeah,
like, yeah,
yeah,
it's and plus like, when the market's down like on Monday, that's when conviction really matters. Right.
yep,
That's why it's like whenever the market is down that much, I kind of rotate out of positions again into other positions because it's like I need
yeah,
to consolidate my stuff here so I can feel comfortable if the market drops further. Like if the
yes,
market is down an additional 10% here, you're going to assume that almost everything in your portfolio is down more than 10%. So
yep,
what do you feel comfortable holding if that drawdown does happen? I feel like
yep,
that's something that everyone needs to realistically ask themselves because there's a lot of bulls there who are borrowing conviction from people. And when
yep,
something drops so much, they sell it because they get scared. But if
yep,
that was your own conviction, you
yep,
probably wouldn't sell it.
yep.
One thing I also wanted to kind of just address real quick. ETF FaceTime asked, who is Michael Gadd? So Michael Gadd is I don't want to say he's one of the biggest bears ever, but he literally is like the biggest contrarian person on Twitter. And he's not doing it because I feel like he's not doing it because that's how he feels, but he's doing it because he
Being
knows
ignorant.
it's gonna get views. Yeah, it's gonna get engagement, it's gonna get impressions, and he has like a whole podcast where he interviews people and stuff. So that's who Michael Gate is. You could probably like find him on Twitter or something, but like I don't know. That guy is a pretty interesting guy, but like you already know what he's in the game for. He's not in it for to gain popularity. He is in it to gain popularity, but he's not in it to like make money off it.
No.
So I got this 500 call open here. I'm going to share my
That's right.
screen in a second.
So,
Yeah.
dude, and I actually bought the
Oops.
AMD call right during that dip. Yes, was it yesterday or what day?
It was like 132 or something. It was sub 130s.
Yeah, I bought the 350 call for like $8.55, and right now it's $9.90. So it's gone up around 15% since I bought it.
Wait,
So
you bought it for 3 something and now it's at what?
No, so this is an AMD call that I'm looking at.
Yeah.
I bought it for it's a $350 call expiring December 2026. So I bought it for $8.55 and it's worth $9.90 right now. So
okay.
You know, it was just lucky timing, really. But during the Saturday morning spaces that with Kat and the gang,
yeah, I remember that.
Like they were talking about NVIDIA and other. I think Danny was talking about chip stocks, and other semiconductor stocks.
Yeah.
And one that I've noticed that has been falling out of favor was AMD. And I know in the past for me, I also really didn't like it compared to NVIDIA because their top line and bottom line just didn't hold the candle to NVIDIA's. Like NVIDIA's growth, revenue, and all that is just crushing it compared to AMD.
I mean, I was really going to say that, like, the whole NVIDIA versus AMD thing, like, if you're going to be bullish data center stuff, like, just go long NVIDIA, because people look at, like, the option premiums or whatever, and they look at like basically all this the valuation of it. But then what they got to understand is that the data center growth that AMD is having is not like a huge portion of all of their revenue. Right. So if you really want to be long data center, if you really want to be long AI or semiconductors, GPUs, whatever, it really would be NVIDIA. Because one, like they're the leader in the market. Right. So, okay, you have Palantir right now, right? They're the leader in, I would say, the software AI market for a lot of private sector, public sector, and their growth is enlarging. And when you think about all their costs, they keep their costs in check. They're profitable and everything. Or would you buy Snowflake? I'm not trying to say one company is better than the other one, but to you, Palantir is the better investment. So if you look at AMD and NVIDIA, people just don't buy NVIDIA because they think it's like too expensive. It had a huge run. So AMD is like down here. So it could like make that run that NVIDIA. It's like, no, that's not really how it works.
Yeah. And that's where that knowledge really does kind of, for me, since I don't have that, I guess, background knowledge, or I haven't done really my DD on semiconductors as much as most, NVIDIA and AMD bulls are. Yeah. So for me, I'm kind of falling into that where I'm saying, oh man, look, NVIDIA, AMD, I don't think it'll ever catch up to NVIDIA, but I think compared to just even year to date, I mean, the fact that AMD is down year to date, I think that was kind of like for me, what locked it in was I just looked at the RSI over the last 5 years and I'm thinking, okay, in the past 5 years on the weekly RSI is like at 43 right now. If I could just buy this long call option and then sell it in the future, a couple months out, maybe a year out, if and when the RSI goes up to the high 60s, 70s, there's a good chance this call option will be, pretty profitable. But it was done, but it had no basis on the fundamentals of AMD, like,
So you're just playing technicals.
Purely just technicals. Okay. And it shows with my allocation because I really am not, I'm not putting in too much. I'm putting $800 on this, and I'm just gonna let it ride.
Okay, let it ride, but don't sell it. Don't sell it. If you're gonna let it ride, don't sell it, because if you sell that at a loss, man,
no,
you better have a damn good reason to sell that at a loss. Because if it's a gamble, it's got to be just a YOLO. Like it's got to be like, okay, wait, when does that expire? The AMD one,
December 2026.
Okay, so then $800, just forget about it. It's gone.
Yeah.
Just forget about it. Look at it a year. And if AI is a sham, then guess what? Your whole portfolio is going to go down. It's not just AMD. And if AI is a real thing, which I mean, I happen to think it's a real thing, right? So I mean, off the premium and considering the IV that's on that thing, if AMD runs like 20%, which it can easily run 20%.
It's crazy how much.
Considering its sentiment right now, I
Yep.
think that there's a possibility it could, because people aren't really positioned for that.
Yep.
Fundamentally, obviously, AMD is never going to catch up to NVIDIA, but on a technical and sentiment perspective, it can run 20% in just a couple of weeks, right? So if that happens, are you going to get out?
Honestly, I probably would, but I think what would make me pull the trigger was looking at the weekly RSI, and if I see that it's approaching some type of, multi-year or yearly high, then I think that would be the time for me to get out, even if I think it might have a little bit more juice left. I just really do keep it simple when it comes to some of the things that I do with the technicals. And I mean, because it's crazy, because just in the month of July, like AMD ran up like 15%, no, 20%, which is crazy. From June 18th to July 10th, it went up 18%. So,
yeah, man, it can move. It's a much smaller market cap. That thing could definitely move.
Yeah.
So you mentioned earlier, you mentioned Peter Lynch. Do you want to, I got this, PDF that you sent me earlier.
Oh, that's right.
Yeah.
Sure.
I was reading through it again today. I was like, man, I haven't actually sat down and read this stuff fairly recently. So it would probably be a good idea to go over this, and you can share. Hold on. You can share like which rules matter the most to you over here.
Oh,
all
yeah,
right.
definitely.
So there you go.
Let me.
So what was the first one you wanted to look at?
So the first one is rule number 6. So yeah, so for people who are watching, I think out of a lot of like the investors, I think it's important for people to have investors that they can look up to, not copy, but try to emulate some of their thinking, some of their psychology, why they do the things that they do. And for me, Peter Lynch is one of them. Just whenever I hear him talk about his psychology, I mean, he ran the Magellan Fund in was it the 80s or 90s? And it was a highly successful fund.
It was the 90s. Yeah.
He was highly successful. Like, the dude crushed it. So I think it's important to listen to people like Warren Buffett, Peter Lynch, and others, who are the greats. So I don't want to talk about every single rule. So the first one is rule number 6. You have to know what you own and why you own it. This baby is a cinch to go up, doesn't count. And I know I fell for that, where I would buy stocks because of the people were saying that it was going up. I buy this. And good thing I never really got into like crypto as much, because if I had gotten into crypto like in the 2020s, 2021, I probably would have lost all of my money, like chasing shit coins that were just going up for the sake of going up. I like this coin, I like the project, but I mean, it's just really like it's insane how many of these pump and dumps happen, because people don't know what's pushing them up. And it applies to companies too, like if people are just copying a trade, he's buying Palantir, I'm going to buy it too because it's going up. Well, what happens tomorrow? Like if Palantir starts tanking, or they miss earnings, or the fundamentals start going to crap, you need to know what you own. And for me, knowing what I own and why I own it, that's what allowed me to buy the dip on Monday. And I didn't break a sweat when the whole world was burning, and everyone's panicking about the Japanese carry trade. I know what I own, and I don't have to panic about it. So that's number 6. Rule number 10 is the next one. Rule number 10, never invest in a company without understanding its finances. The biggest losses in stocks come from companies with poor balance sheets. Always look at the balance sheet to see if a company is solvent before you risk your money on it. And that was, out of all the reasons I invested in Palantir, this one is probably the heaviest one. That's what gave me the most conviction to actually put my hard-earned money into it, was the fact that they have no debt. Their top and bottom line has been growing for quarter after quarter after quarter. But the no debt, for me, it's huge, because that tells me that the company is also taking it seriously. They're not going to be borrowing a bunch of money and having all this risk on their sheet, knowing that they have clients and customers that depend on Palantir. So now I like that the Palantir management is putting themselves in the shoes of their customers and their partners, saying, why would I want to partner with a company that I don't even know if they're going to be around during the next recession? So why would I put in all this money and build this software and build an ontology and get all this information tied up, when we don't know if they're going to be around next year. So the fact that they have no debt, that's telling the customer, look, we're going to be around today, the next 10 years, depression, recession, no matter what, like we don't owe money to anyone, we'll be around. So for me, that was the biggest reason to really put, go all in on Palantir. Rule number.
So wait, hold on. Let's look at rule number 22. That was the last one you had on there.
Yeah.
Time is on your side when you own shares of superior companies. You can afford to be patient, even if you missed Walmart in the first 5 years. It was a great stock to own in the next 5 years. Time is against you when you own options. What do you think about that one?
Dude, that's huge, dude. Like that, and that's probably like what has been helping me navigate all of this volatility this year. I mean, it's been a crazy year so far, and it's crazy how hardened I feel like I'm getting, where I see panic on the timeline and I'm looking at my portfolio, and even if it is down, I myself am not feeling panic on the inside, or I don't feel that fear that a lot of people are kind of sharing online. So it's and then when he's talking about owning shares of superior companies, meaning like you can wait this out. Like I know I own shares of Palantir. I know maybe Palantir is down 5-10% just like every other company, but I'm not going to be panicking and running to sell to buy something else. And then him talking about missing Walmart the first 5 years. People who missed out on Palantir between DPO and today, even buying today, if they're buying to hold for the next 5 years, 10 years, they're going to, I think, me buying the shares, I'll be making a pretty good return on it. So I think it's important to know what it is that you're owning. And with buying the options, people are buying call options expiring next week, next month, and they're sweating. Like the company's going up, the stock is going up, and now they're just kind of looking at their call option that's about to expire, fighting theta, and it's stressful.
It's better to be on the sell side of that one when that happens.
Yeah,
I mean, it's better to sell those options and buy them.
I mean, it's
that's
incredible.
What I always look at it. Yeah,
it's selling those covered calls at 33, 34. I mean, it's insane. When I start doing the math, okay, my portfolio would be this much if Palantir even got to 33, 34, and it's incredible to think about. The premium that I'm receiving just for putting those shares like on the line. It's pretty nice.
Yeah. I mean, I still haven't sold cover calls of mine. I'm actually waiting until CPI tomorrow to possibly sell some cover calls against my shares. So, I mean, we'll see what happens with tomorrow. If the market ends up pulling back, well, then that's cool. I'll just hold on to Palantir. That's fine. But I mean, if it pumps up, I don't know. We'll see how it goes, because we got the rug pulled more than a few times, especially with IWM QQQ after that FOMC meeting. All right. So to close it all off, I wanted to get your input here on, well, I mean, I wrote up this agenda yesterday, and then I'm looking at it now. I'm just like, are we heading toward new highs? Or are we not? And then I look at what happened in the market today. I'm just like, well, maybe we're heading to new highs or not. But like, in your opinion, in the next, because I know right now it's like seasonally a weak period in the market. Do you think we're going to reach new highs next, or we're going to reach new lows? When I say new lows, I mean like recent lows last week.
Like in the market in general, like SPY QQQs?
Yeah, like if we're going in any direction, right? Do you think we're going to reach new all-time highs in the Qs and SPY, or do you think we're going to reach new lows from last week?
Oh, in my opinion,
like a year from now too, but like
I think
the next one we hit.
I think Monday. I mean, I hate going on the record right on these things, but like I think Monday.
Well, no one's ever going to be right, so like
That's true. That's true. So, but in my opinion, I think Monday was the bottom. I think, and I think it's just a lot of that fear as it's getting dissipated, and with CPIs coming in cooler, the market getting better, or the inflation improving. I think there's quite a few reasons for the market to continue just melting up. I think it's just going to keep ripping, and yeah, I think we see higher highs before we see like lower lows, I guess.
Cool, man. I agree. And do you think the Fed's going to cut in September?
I think so.
Okay.
Even though they say,
100% chance they will. The market's pricing 100% chance they will, so they're probably going to cut.
And I guess, and that's where like, and also what I'm thinking about with the whole Japanese. I mean, I haven't really thought into it too much, but like the whole issue was that Japan had raised their interest rates, and then the Fed, because they had higher interest rates, they were able to make money between that, right?
Yeah, the carry trade.
Now, if Japan keeps their interest rate high and then the Fed starts cutting, like do you think that would start a new round of carry trade panic where it would
No,
kind of create a squeeze?
the panic happened. Everyone CYA'd, and it's not going to happen for a long time. Like that's like basically saying that Volmageddon for 2018 or 2016 when Volmageddon happened, which is basically when the VIX like blew a lot of hedge funds up. That hasn't happened again since. Like we hit VIX 65, but like I'm sure hedge funds blew up, but probably not for that reason that they were shorting the VIX with all the liquidity. There's a lot of measures put in place where that's probably not going to happen again. But probably for the same thing. That I do agree. I think right now, I think the lows are in, especially when you compare it to the VIX, because there was just so much imbalance on Monday. But because now everyone knows and like everyone just became an expert on the yen carry trade, that's when it's not going to happen again because everyone's an expert at it. You know, it's just like, well, yeah. Yeah, and whatever, and then the next thing is like, you know, everyone's going to become an expert again on inflation. Just like it's the same thing. It's not going to surprise anyone. Yeah. Okay, cool. And do you think we're going to get a recession in 2025?
I don't think so. I've been saying for a while that I think people forget that we were in a recession in 2022. Like
we didn't admit it, apparently.
No, and one of the few people that I see one of the few people that I see kind of reiterating it as well as Kris. I think Kris has kind of brought it up multiple times. And because like whenever I hear people talk about, oh my God, the upcoming recession, it's what I think is that the 2008 recession really traumatized every millennial out there, or every investor out there is now looking at every dip as like, oh, is this the next one?
Recency bias.
Recency bias. Everybody's expecting it. Everybody's going to go back to that as in, oh, it's going to happen again. It's going to happen again. And I mean, think of all the people who never got back in after 2008 because they were waiting for the double dip recession.
Yep. It's more like if you take someone who perfectly timed the recession, right? Like, so let's take Michael Burry, for example. And he's doing good in the stock market, but I'm just saying that a lot of people look up to him as like an idol. So they're really following his moves. So they think because he recently did it, he can predict it again. But what's that joke around where it's like, oh, they predicted like 20 out of the 7 recessions. And it's like, well, you know how many times people thought there was going to be a recession between 2008 and COVID? There were at least like 5 or 6 scares that there's going to be a recession. And I agree with you. I don't think we're going to have a recession. I think the next recession will probably be a big one, but it won't be for years for now. People will keep predicting it. And that's literally what the market does. It just climbs the wall of fear. That's all it does. Without that, the market won't propel higher because everyone will be long.
Yep. And today, actually, I shared with a friend who was talking about wanting to sell his shares because of all the fear. I don't know if it's going to catch it.
Yeah, man. That's exactly right.
It's like all
I could kind of see it. Yeah, I could kind of see it.
So that is the S&P 500 over the last like 20, 30 years with major developments, major wars, major recessions and stuff like that overlaid. So you had all those millions of reasons to sell from then and now. And I mean, look where the market has gone the entire time. And
pretty much, man.
People are kind of too zoomed in, you know, they're too locked into the daily fluctuations, you know, and as humans, we're pattern seeking apes, you know, so like we want to assign meaning to every little gyration in the market and we'll say, oh, it's going up because of this, it's going down because of this. And maybe it's just all noise. Like we take a couple of steps back and we see all the companies we're buying, you know, all the metrics are going up and to the right. So I think
that's
over
really
time,
what it is.
Yeah, I think that's what it is. So for me, that's what I'm trying to focus on is just taking a step back.
Cool, man. So I think that's about it. We can wrap this one up. Everyone, again, this is Garcia from Garcia Capital. How much money do you guys manage? You manage about $2 billion.
$2 billion. Yeah, we lost.
Okay, cool.
Yeah. We froze customers' account earlier this year.
That was you. That was you that did it in Schwab. That was your fault. Okay, I thought it was your fault. All right. But yeah, I'll just throw it on there so people can follow you. And again, thank you everyone for attending. Garcia, thank you for being here. And if you're new here, please remember to like and subscribe. We have many more videos coming up, many more interviews, and lots to come by. Right? Thanks for coming, Garcia.
Yeah. Awesome. Thank you for having me, man. I appreciate it.
Hey, no problem. Take care.
All right, you too, man.